Hello, friends. SSA just changed the rules for households. Not the kind of change that shows up in a headline, not the kind that generates a press release explaining what shifted and who it affects. The kind that goes into SSA's administrative guidelines, takes effect on a date that was never communicated directly to the people most impacted, and begins producing results in benefit calculations and eligibility determinations across the country, while the seniors sitting inside those households have no idea the rules they have been living under just got rewritten. The seniors this change affects most directly are the ones who can least afford to absorb the consequences of not knowing about it. Low-income seniors. Seniors on fixed incomes that were already stretched before anything changed. Seniors who built their monthly budget around benefit amounts and program eligibilities that the household rule change is now recalculating underneath them without warning. I have gone through exactly what SSA changed, which household situations it applies to, what the dollar impact looks like, and what every affected household needs to do right now to make sure the change works in their favor rather than against them. Stay until the very end. The last rule change applies to a category of low-income senior households that this update affects most significantly and most silently. And for those households, the action I am going to describe is not optional. Before we get into it, if SSA Now is where you come to find out what SSA changed before it changes what you receive, subscribe right now and turn on the bell. Household rule changes move through the system quietly. You should not be the last to know. Let me start with what SSA actually changed. The first household rule SSA changed, and the one affecting the most low-income seniors right now, involves how in-kind support and maintenance is calculated for SSI recipients sharing housing with family members. Supplemental
Security income provides monthly payments to seniors with very limited income and resources. For SSI recipients who do not pay their full share of housing and food costs because they live with family members who cover part of those expenses, SSA has historically applied a reduction to their SSI payment called the In-Kind Support and Maintenance Reduction. Under the previous rule, this reduction was calculated using a fixed formula that reduced the SSI payment by 1/3 of the federal benefit rate, regardless of the actual value of support being provided. SSA's rule change eliminated the food component from this calculation entirely. Under the updated rule, SSA no longer counts the value of food provided by household members as in-kind support that reduces the SSI payment. Only housing-related support, rent, mortgage contributions, utilities, remains in the calculation. For low-income seniors who were having their SSI reduced because they live with family members who provide meals, cook shared dinners, or stock a common kitchen, this rule change means their SSI reduction should be lower under the new calculation. For some seniors, their monthly SSI payment just went up. For others, they now qualify for SSI when the previous calculation had placed them just outside eligibility. But here is the critical problem. SSA's implementation has not been uniformly applied across all affected accounts. Some SSI recipients have already seen their payment adjust upward automatically. Others have not, either because their case was not flagged for automatic review or because the change requires updated household information SSA does not have on file. If you receive SSI and you live in a household where family members provide food, shared meals, groceries, a common kitchen, call SSA at 1-800-772-1213 and ask specifically whether the in-kind support and maintenance food exclusion has been applied to your account under the updated rule. If it has not, report your current
household food arrangement and ask SSA to recalculate your SSI payment. The retroactive implications are significant. SSI recipients whose payments should have adjusted upward and have not are entitled to a corrected amount and potentially a back payment covering the period since the rule took effect. If you previously applied for SSI and were denied because of an in-kind support determination that included household food contributions, the rule change may have moved you into eligibility. Contact SSA and ask about reapplying under the updated framework. Drop a comment right now and tell me, did you know before today that family members providing food in your household was being counted as income against your SSI? Because the number of seniors who have been incorrectly reduced under this rule is significant, and the update is the mechanism that fixes it. Second household rule SSA changed. Updated income counting methodology for Medicare Savings Program eligibility in multi-person households. Medicare Savings Programs, QMB, SLMB, and QI, pay Medicare premiums, and in some cases cost sharing for low-income seniors who meet income eligibility requirements. What SSA's second rule change updated is how income is counted in households where a senior lives with an adult child, a sibling, or another family member who is not their spouse. Under the updated rule, SSA has clarified that income belonging to non-spouse household members who are not themselves applying for Medicare Savings Program coverage is excluded from the applicant senior's income calculation for eligibility purposes. Previously, SSA field offices applied inconsistent standards in this area, with some treating a portion of a co-resident adult child's income as household income relevant to the senior's eligibility and others excluding it. The updated rule standardizes the exclusion across all field offices. For low-income seniors who were denied Medicare Savings Program coverage because SSA incorrectly included non-spouse household member income in their eligibility calculation, this rule change creates a basis for immediate reapplication with a strong likelihood of approval under the corrected standard. If you live with an adult child, a sibling, or any non-spouse family member, and you have been denied Medicare Savings Program coverage, or if you have not applied because you assumed the other person's income would disqualify you, the updated rule changes that calculation entirely. Contact your state Medicaid office or call 1-800-MEDICARE and ask specifically about Medicare Savings Program eligibility under SSA's updated household income counting methodology. The financial impact of qualifying for QMB alone is enormous for low-income seniors. The $185 monthly Part B premium is eliminated. Deductibles and co-payments disappear. Prescription drug costs drop dramatically through the automatic extra help enrollment that comes with QMB qualification. For a senior paying these costs out of pocket on a fixed income, QMB qualification under the updated rule can mean several $100s per month staying in their budget that was previously leaving it. Third household rule SSA changed. Revised resource counting standards for SSI eligibility in households where multiple family members share ownership of certain assets. SSI has strict resource limits, $2,000 for an individual and $3,000 for a couple. Resources above those limits disqualify a senior from SSI entirely. Historically, the resource counting rules created situations where jointly owned assets, a car, a shared bank account, a piece of property, were attributed in full or in disproportionate share to the SSI applicant, even when the asset was co-owned with household members who had independent legitimate interests in it. SSA's third rule change introduced a more proportional attribution standard that counts only the SSI applicant's actual ownership share of a jointly held asset, rather than
The full asset value. For seniors who were previously found to exceed resource limits because of a jointly owned vehicle, a shared bank account maintained with an adult child, or property with multiple owners, the updated standard may now place them within eligibility limits they previously could not reach. If you have previously applied for SSI and been denied because of a resource determination involving jointly owned assets, contact SSA and ask specifically whether a reapplication under the updated proportional resource attribution standard would produce a different eligibility outcome. Bring documentation that establishes the co-ownership structure and each party's ownership share. The updated framework requires SSA to count only your proportional share. That documentation produces the correct calculation. Fourth household rule SSA changed, and this is the one I told you to stay for. Updated interaction rules between SSA household income determinations and LIHEAP energy assistance eligibility for low-income senior households. LIHEAP, the Low-Income Home Energy Assistance Program, helps low-income households cover heating and cooling costs. With food-based in-kind support now excluded from SSI calculations, the income figure that flows from SSA records to LIHEAP eligibility determinations is correspondingly lower for the seniors most affected by the SSI food exclusion change. In practical terms, low-income seniors whose SSI income calculation just changed under the food exclusion rule may now also see a change in their LIHEAP eligibility. Seniors who were previously just above the LIHEAP income threshold may now fall below it under the updated SSI income figure and qualify for energy assistance they were previously just outside the reach of. To capture this benefit, SSI recipients who live in households where food support from family members was previously counted as in-kind income should contact their local LIHEAP office, reachable by dialing 211
from any phone, and ask about updated eligibility under the revised SSA income calculation. Address the SSI recalculation through SSA first, then bring documentation of the updated amount to the LIHEAP office. Here is the thread connecting every household rule SSA changed. Each one was designed to more accurately count what a low-income senior household actually has versus what previous rules treated them as having. Food support from family is not income. a non-spouse household member's earnings are not the applying senior's income. A proportional share of a jointly owned asset is not the full asset value. These corrections open eligibility doors for low-income seniors that previous rules had incorrectly closed. But none of those doors open automatically. SSA updated the rules. SSA did not update every affected account. The seniors who benefit are the ones who know the rules changed and contact SSA to apply the updated framework to their specific situation. So here is what to do right now. If you receive SSI and live with family members who provide food, call SSA and ask whether the food exclusion has been applied to your account. If you have been denied Medicare savings programs while living with a non-spouse family member, reapply under the updated household income exclusion rule. If you were denied SSI because of jointly owned assets, ask SSA about reapplication under the proportional resource attribution standard. And if your SSI income calculation changes, contact your LI-HEAP provider at 211 to assess whether updated energy assistance eligibility applies. 4 rule changes, 4 actions, all available right now for the low-income seniors who know to ask. SSA changed the household rules. You just found out. If SSA now gave you information today that directly affects what your household receives, subscribe to this channel and turn on the bell. And share this video with every low-income senior you know right now. The household rules just changed for
their situation too. Whether they find out today or after the window closes is a difference that matters more for them than for almost anyone else.